Okay. Testing. Jamie Saettele here, and I am told I'm good. Great. All right, so let's get started. I've got a pretty full slate of things to talk about here today, so just configure some stuff here with the question box, and then we'll get started. Okay. Let's see, we've got some big questions, a really long question here. Okay. So Gert has a very, very long question. Talking about longer-term trades. Yeah, I mean, you can sit in a long-term trade if you wish. You know, for an extremely long period of time. Talk about trades lasting several quarters rather than shorter-term trades. Look, I mean, I have a certain style. It's how I've traded. I have multiple accounts, you know, where I will put on long-term trades and just sit with trades. But as far as a trading service, I don't know how valuable it would be for me to just tell you guys. You know, I mean, I would love it if people would just pay for me to say put this trade on and sit with it for however many quarters, and then I wouldn't have to really do anything. That'd be great. But unfortunately, most people, you know, subscribers want more activity. So, you know, year to date, we are up for the month, or up for the year. Let's see here. Hold on. Year to date, the service is up 1,727 pips, and that's with an average leverage of a little, about 1. So that means that's 17% with basically no leverage. So if you were to use 10 times leverage, that would be 170%. There's 59 winners, 61 losers, 28 break even, average gain 76 pips, average loss 45 pips, average time in winners 4 pips, average time in losers 2, or average time in winners 4 days, average time in losers 2 days. We started out the month with 273 pips in the first week in December, and have given all that back for this month. So as of right now, we're down 2 pips for December. You know, I understand what you're saying, you know, as far as the longer term trend. I mean, these are things I've pointed out for a long time as far as, you know, the possibility for a huge dollar rally and this and that. But, you know, as far as the service is concerned itself, you know, not really what the service does as far as just sitting in trades for quarters and quarters and quarters. Now, you know, back in the middle of, or early part of the year, January, February, and March, when I was talking about a possible huge dollar rally coming, and looking to position for it, and people were telling me that why I should be trading short term at that time, okay, and range trading. Now that we have been trending for a while, people are telling me that I should be trading trend. You see what I'm saying? So be careful. Just because we've been trending for several months, really since May, really since July, when QE ended, doesn't mean that it has to remain like that. Okay. Yes, Alex, I did remember to hit the record button. Thank you. So getting into where we were going to start talking about things here. So first off, you can see my screen right now. This is basically how I have got my screen set up for the trading day. So, you know, when I go through, if we bring up the website, when I go through these, okay, the longer term charts here, for example, and Gert, you know, you should use these longer term charts. For example, here's dollar Swiss. This is a daily chart. This is the daily chart. I update this stuff on the weekend, the daily and weekly charts. And you can see, for example, that dollar Swiss here, okay, this level is highlighted on the chart, talking about support down to this week about 95.60. Okay, this was written on Sunday, 95.60. Then if I bring up the current chart of dollar Swiss, this is that exact same chart, just it's updated. You can see that we dropped right into 95.52. Talked about support being at 95.60, and here we are at new highs. So this is, you know, stuff that you should use if you're looking to trade that longer term stuff. You know, I consider FX to be something that you really kind of have to trade a little more actively because, to be quite honest, the markets don't move all that often. You know, or you know, with leverage, obviously they do, but you know, the markets, you know, move a couple, maybe a percent, if that, a day. Although recently you've had some big moves. So, you know, if you are wanting to put on longer term plays, then I would suggest looking towards this, to these, focusing a lot on the daily and weekly charts that are posted here. Okay. As far as the daily timing updates are concerned, I usually give you guys about 5 or 6 charts a day, stuff that I'm looking at. And these charts that are here are the ones that I have on my chart, or on this, you know, workspace here. So I have it all highlighted so that, and I'm changing it throughout the day just so that I know when we're getting to a level, I might want to take a trade. As I started the webinar, I put up that chart of dollar yen with 119.13 as resistance. I was actually sitting here with this 5-minute chart because I'm waiting for the market to get up here. I want to sell dollar yen. You know, like a 20 pip stop or something above the morning high. See if we can take it down to 118.25 tonight. So that's something I'm looking at here right now. Okay. So let's talk about the dollar yen trade actually. So we'd had, we'll bring up the naked chart again here. Nothing on it. All right. So here's an hourly chart. Let's go to a 4-hour chart actually. And we'll do some look back. Okay. So one of the, on Monday, we had posted, and over the weekend had posted some stuff for dollar yen about these a chart that was put up here. I was playing for the, you know, with all the intraday stuff going on up here, I was trading back and forth for a while. And Greg here has a why trade against it? Why not wait to hit the lower fork? Look, Greg, everybody's going to trade their own way, okay? That's just the way it is. You know, I do a lot of intraday trading back and forth where it might be 5 trades a day, 10 trades a day, 20 trades a day. I mean, you know, it just depends. Today I've made 1 trade, but, you know, the trend is up, right? Well, yeah, the trend was up here too, right? And then the dollar yen fell 600 points. So, you know, we're getting into levels that I'm willing to trade on the short side with a 20 pip stop. You know, I wouldn't consider this a swing trade that I would put up on the website because it can change in like 5 minutes, and there's no way for me to, you know, possibly, you know, change that quickly on the website. But, you know, I'm just kind of giving you guys a feel for what I'm looking at and how I'm looking at it. And let me continue on here with the dollar yen. So we've come into a big support level. It's possible that we go to new highs at this point. As we've come into a huge support. Again, these lines were published on the weekend, and we have come into the big support. On Monday, we looked at a possible ABC ending down near 116.10. Did get all the way down to 115.55. When it came to finding a support level, again, here we are. Let's work with slope. Ended up being pretty good support right there. We talked about the triangle that we had going on here. This thing got the low right here. So what we've got at this point is an ABC pattern down. You know, with the market taking out these highs up here, you know, expect some back and forth. There's going to be this is the short-term fork, I think, that you want to watch at this point. And it's a shift. And oops, wait, what did I have here? What do I have on this thing? Oh yeah, it goes from there. So it goes from here. Okay. So we have a couple touch points down here. And we'd be looking at support. Again, 1825, which is about the end of the day or so, if we get down there. And that would be support before Asia. Okay, so one thing that may be going on is an A, B, or 1, 2, 1, 2, 3, pull back forward to 1825, and then look higher again for, you know, potentially 120 or something. The levels that we're going to get into on the upside, again, as far as potential for playing the other side, would be, again, 119.40, 119.60. Talked about that last night. Ultimately, 120.67 is daily reversal resistance. That's an interesting level to focus on. But my near-term focus is on 118.25. Now, I want to talk a little bit more about why I taken the dollar-yen swing short. So here was the top. This is an hourly chart. It's got a little RSI alert thing that I developed, and it gives kind of ideas for selling bounces and buying rallies. Okay, this is a short-term chart, obviously, so this is an hourly chart. And here we have the A, B, C, D, E, wave C decline, move higher. The reason I was looking at shorting 118, there are a few reasons actually, but one, I keep 120-hour moving average on the hourly chart. So what happens once if you have a trend change, okay, and the idea was that we'd have a trend change in the dollar yen. Okay, hold on. We had a trend change in the dollar yen with a possible head and shoulders breakdown. Okay, got the shoulder here, the head here, shoulder here. Possible breakdown. The idea was, one, selling back into kind of a retest of former resistance. Okay, so you know 118 area is former resistance here. Also had the 120-hour moving average, which is a 5-day average. Okay, so that's just a very simple strategy, whereas if you're looking to catch on a big reversal, you know, obviously you don't want to do it initially, I don't think, on a break like this, but if you do it when it comes back to retest your resistance area, former support, look for it to become resistance and for it to continue lower. So that was the first test of, one, the 120-hour moving average, and two, coming back into the area that was former support. Now it just didn't work, right? You know, it just didn't work. So it didn't work, and that is trading. You move on. So as it is now, again, 118.25 or so, I'd be looking for possible support down there. Okay. Now you might ask, why would I call 119.13 resistance? You can see here, by the way, this is a 240-minute chart with the RSI buy and sells on it. And earlier to Gert's question about the trend and whatnot, you know, I was putting out buys, you know, at different points in August to get on board the dollar yen train. The market never traded down to the levels that were identified. I think on this one, I had an order at like 102.77. I remember that day, and the low was something like 103.02. It just didn't trigger. So that was kind of the deal back then. Now we could still have a topping process here as per this larger. These are the first sell signals we've had since back here. Okay, this was in October. You know, we're trading right at the midpoint of the 20-day. That's another thing too. You can see this was the first 20-day low we'd made in a really long time in dollar yen. A lot of times when you 20-day low, you come back and test the 120-hour or 5-day moving average. It gives you a nice entry to get on board the larger move. Okay. So that's another thing that I was looking at there with dollar yen. All right, so 119.13, which is a level I'm looking at coming up here for dollar yen. If we pull up a 60-minute chart, 119.13 is the close of the hour this morning at 10 a.m. That's why I'm looking for that to be resistance. And if I show you euro yen, it did something very similar this morning. I put up a chart this morning on euro yen talking about the consolidating nature that we've got going on here in euro yen since the low 2 days ago. And you can see that the high hourly close for this particular move would be this bar right here. The close there is 146.47. This morning's high, 146.50, 3 pips away. Okay, so that a trade like this, 146.50, low 145.60. I mean, it traded off just 90 points here in the course of 2 hours. So these are the kinds of very short-term trades that I like to take intraday. You can see down here the low hourly close for here on the 16th was 145.44. That level acted as support here. It acted as support again here. These are trades that you can take, just with very tight stops and getting very quick profits or quick losses, but they're very small losses. So there is an example of why I'm looking at 119.13 as I'm doing this webinar to take a dollar-yen short, potentially for 118.25 or even lower. Okay, so I hope that helps. One setup that I'm particularly excited about. Jonas here has a question about Euro Aussie. We'll get to that here in just a moment. One setup that I'm particularly excited about is pound dollar, the triangle. We've been following this triangle for weeks and weeks. It's been going on since the November low. And here we have A, B, C, D, and suggested last night that we could get a bounce that lasts 1 to 2 days in wave E before we get the bigger, turn lower. Okay, so in this case, that resistance area is going to be about 56.90 to 57.20. Continuing to watch this region for resistance, in particular the this new line, which is extended to parallel, just extended from the high that we had here a couple days ago. Okay, and if this were to play out, give you a target idea on how far this thing could run. Greg says, why trade pound till it picks direction? Well, that's the thing. We've been consolidating now since the November low, right? So markets go through periods of consolidation and periods of trend. So we're looking to get the end of consolidation to get a high, probability, low risk entry. Okay. A lot of times after the market's broken out, especially in pound, it can be very difficult to get a low risk entry. Because pound likes to screw around, if you will. So if you're able to get a good entry, such as up here with 57.20 with a stop at say 57.90, 70 pip stop, and you're in, your reward to risk is significant, as this is a triangle, a broad triangle. If you wait until it breaks down, you're putting yourself at risk of a big false break and getting in at the worst possible price. Okay. Also to your point, when Greg asking why trade pound until it picks direction, that I understand the idea, but if you've been trading for any longer than this year, you'll know that the markets are rarely so easy on their breakouts. Okay, a lot of times you have to guard against the big false breakouts. And that's what, I strive to do. All right, so if the market were to top near 57.20, we'd have triangle targets at 54.40 and 52.65, okay? And that's taken by, again, measuring wave B and then measuring that, wave B level from where the end of wave E is. And we don't know where the end of wave E is yet. But I'm just, kind of guessing that it could be near 57.20. That's the week open. You know, if it's not at 57.20, let's say that it's at 56.90. Say it's at the 61.8. Those levels are 51.08 and 52.34. Okay. Now when we look at that, let's see if we have anything longer term on the British pound at those levels. Okay, so here's the weekly chart. We are bouncing from reaction zone. And as far as the possible targets of 54.08 and 52.34, well, we have a 153.96. It's pretty close to 54.08. 2 equal legs down from the high up here. We have a 51.30, so not so close to 51.30 or 52.30, I should say, but would give a wider zone for 51.30 to 52.30 on the weekly chart. Okay, here's the daily chart. You can see that the market actually traded tick right into that reaction line. Before, you know, then fall, and kind of market started to come off. All right, so the pound is one that I'm very, very, very much interested in over the next, you know, 1 to 2 days. I mean, really, at this point, I guess it'd be the rest of the year, as there's not a whole lot left. Tuttle, good question. Good morning, Jamie. Says on your swing update, you say orders are for that day only. Do you mean until New York close? Yeah, so that means until the New York close. You know, consider the New York close to be the end of the day. It is the westernmost major market. So, you know, the beginning of the day, the trading day, is 5 p.m. That's when the easternmost markets are opening up, right? The Far East. The final New York, the final session really is New York. So that's why you'd be looking to call that the end of the day. I understand there really is no end of the day, but you have to have a way to tell Thursday from Friday and all that. So, yeah, that's what I mean by that. Dollar Mexican peso is another one that we are following extremely close, right? So we've, if we look at dollar Mexican peso, look at all the different. So the market traded up into this big upper parallel and did end up finding resistance at the top of that upper parallel. So what you look for now is support from the median line, okay? That's where you look for support, and support comes in, one would expect support anyway at the former fourth wave, which is 1428.60 or so, and that happens to intersect this median line over, you know, basically the rest of the year. And as mentioned last night, this is those same exact lines, but superimposed on the hourly chart. Okay. And then if we draw reaction lines on the hourly and the downslope, you can see that we can get an even better intersection. In fact, this would be like the 23rd of December, so that is, what's today, the 18th, so let's see, what's the 23rd? 23rd, that's on Tuesday, would be the 23rd. So it's possible that dollar mex comes down into here, into, you know, the 1423, 1428 area, and finds a low for another move higher, or at least a rally attempt. At the same time, there's resistance up here at 1475.80, and that's a little closer to home. That's more like tomorrow morning, say 6, 7 o'clock in the morning in New York is when you get the intersection between 1475.80 and this trend line here. Okay. Fernando says, do you take into account big news events like FOMC or NFP when you set pending trades? Personally, luckily, I said not to enter those trades because nobody knows what could happen. Yeah, I mean, sometimes. To be quite honest, I was looking for those. I was looking for a bout of dollar strength, but then for it to be faded after FOMC, and we got the dollar strength, and it just continued to be more dollar strength. So instead of a fade. So I really, for me, the chart is the chart, and that's what I'm looking at. I'm trading the levels. I really don't take a whole lot into account, I guess, as far as when I'm going to enter trades. If you have to understand, if you're sometimes the news will work for you. Sometimes it won't. I mean, your batting average in this business, is if it's 50%, that's actually pretty amazing. And if you have a reward to risk of close to 2-to-1, that's pretty amazing. And that's exactly where we're at right now with the year's results. So, everything's not going to work. In fact, you're going to lose quite a bit. Okay, but you got to stick. You got to stick to your plan. How you trade. That means sticking to the plan when things are going bad, and sticking to the plan when things are going good. Right. Okay. All right. So with dollar mex 1475.80. Mike, I am recording the session. Thank you very much. 1475.80 is going to be resistance potentially for dollar max. Okay, went through dollar yen, pound dollar, dollar max. Let's look at euro Aussie because that has come off a very interesting level. This is the chart that was presented last night. This is, the importance of having your charts marked up, right? So that you know exactly. So when you don't have to necessarily think about things too much after you have them all marked up. So this line was one that has just been an absolutely amazing slope. Take everything off here. So sometimes when you look at a chart, it just sticks out. Okay. So these two highs, as you can see, got this low. And then when you extend the low here, that ended up getting this low in September. So last night, when we had the market trade up into this level, wrote about the Euro Aussie potentially trading off, and we have traded off quite substantially. Unfortunately, we're not short at the moment, but if we zoom in to an hourly chart, we can get a sense for if we have something a little more interesting on the short side. One thing I will look to is a broken trend line and see if it's tested as resistance. Okay, not a whole lot of stock in that one because it doesn't really touch much. Okay, that one might be worth watching. You have a number of touches here, touch here, touch here, touches very close, like a pip away from here and here. Consolidated around the level. And then what's the high close day? Is going to be 51.93. $1.5193. So 51.93 is not just the close of the high day, also resistance here, former high, former lows. So I would be looking potentially 51.90 for resistance up to the top of the underside of this level. Okay. If we put a fib up there, let's see what we get. 51.90 is also 61.8. So 51.90 is getting better and better as a level to look at on the short side. Now, if we were to get another low here, that would be even better to sell the next rebound, because at that point you'd have a 61.8. You'd have a 5-wave decline, and then you'd look to sell a 3-wave advance. So as far as the Euro Aussie session or the Euro Aussie swing potential is concerned, coming off the level that we did, still want to trade against it. Want to trade against this high. Want to look for as mentioned last night. Want to look for the first failed rally, and that failed rally, the level for it to fail at would probably be about the 51.90 region, 51.90 up to maybe 52.40. Okay, so that's what I will be watching for closely in the coming, the coming few days. For Euro Aussie, and when we look at, let's see here. Put up the again the daily chart that we've been following. The big support here probably comes in at some point much later, but early in the year in 2015 would be potentially down near 146 to 147. Let's see what the seasonals look like here. When you look at the seasonals for the Euro Aussie, they're actually they're bullish to the latter part of the year, and then they do turn. I don't know why this thing's like this. Anyway, they turn bearish towards the end of January, actually. Okay, I want to talk. Since we just looked at Euro Aussie, yeah. Can you talk? See, Peter asking about Euro Dollar. Of course, yeah. We'll look at Euro Dollar here in just a moment. I want to look at the Euro Dollar. I also want to look at the Aussie Dollar, the two separate legs of Euro Aussie. So here is Euro Dollar. Now we've got to make some changes here. So one thing to point out, this was the entry. We're looking to buy right on this level. Obviously, some people don't agree with that as I do the webinar, because probably the trade didn't work out. But the 23.70-60 area was a big level. That's why the stop was so tight. I mean, it was a 21 pip stop. With a potential upside of, a couple hundred points. And also, I was looking for resistance much closer to the 126.40 region. It's a very well-defined level. You had former highs up there. In fact, the euro hasn't made a 20-day high since July. I'll bring that up, Euro Dollar. So this level, this is a 20-day high, okay, this thing. As you can see, we haven't had a 20-day high since what the heck? 1 year. Download some data here. we go. Okay, so we haven't had a 20-day high since July 1st. And Greg says that's right, you were in a downtrend. Yes, that is correct. You were in a downtrend. Things have been really more of a sideways trend since September. It's been extremely choppy. Even a number of trend traders that I know have gotten chopped up pretty bad since September, as you have had rallies of several hundred points here, here, and here, and here, and here. And Greg, do not forget, we were actually short. We took a short at 125.05 back here, and we were out at 122.70. So we actually caught this whole thing, you know, and then we took a 20 pip loss here. Okay, so you know, it's, you know, you're getting to the point where we're at big long-term support, and I'm willing to be on the long side, right? With the understanding that you're not going to, you know, have every trade be a winner. It's just the way it is. So, for one thing, here's Euro. This is some momentum indicators that I look at. You can see that actually today, I don't know if you can see this. If I make this a line chart, you can probably see it a little better. Okay, well, you can't see that because that's gray. Like that. See that? Okay, so you can see the little blue dots down here, potentially. If you can see that, then those are divergences that are worth paying attention to. Don't forget that, you know, RSI here is actually staying, you know, basically at 40. So we're at a level where one would actually be looking for a low. Okay, the fact that the long here didn't necessarily work out doesn't change the fact that momentum is extremely, you know, low for the downside move at this point. You know, we have the risk of a sharp turn higher as evidenced by this momentum profile on the daily. Okay. And to the point of not having a 20-day high, that, you know, was something that I was looking for before turning short again. Oftentimes, once you get the 20-day high, that's, you know, when everyone turns bullish, and, you know, you're looking to, you know, to go the other way, you know, potentially fade again. We just haven't gotten it. So next guess probably is at the next 20-day high. Jonas says, "What's the significance of the blue dots?" The little blue dots. No, that's divergence. That's divergence. While, you know, the red dots, the bigger dots, are like continuation possibilities. So if I get rid of this stuff, you can see what this stuff looks like. So the blue dots are like for continuation on the long side. The red dots are for continuation on the short side. And the little blue dots are for divergence and possible bottoms, and the little red dots are for divergence and possible tops. Okay, so this is one of the things that I look at when I'm considering a trade. And since we had some here, some divergences down here, and since the trend's been going on for so long, I was definitely willing to put that buy order in at 23.72 with the 23.49 stop. Okay. So that's where we are with Euro. You know, pull up Euro on the weekly chart here. You know, at this point, you know, I'm wondering if this trend line that we're coming into from the 2010 and 2012 lows, if we're going to get that near 22.30 or not. it's quite a possibility. I mean, the market here made 4-week highs just a couple days ago, and then took everybody for a ride. It's been a pretty choppy December. I mean, you can say what you want about being in a trend and all that. It's rarely that. It's very easy in hindsight, I guess, to say that. Even if you were, there really wasn't a whole lot to sell into up here. Again, the resistance was 2600 or 2640. We just didn't get it. Okay. So we move on. So with Euro, I don't have much. Petru was asking the question about Euro. I don't have much in the way of a confident outlook on the Euro at this point. Again, we do have this serious divergence I just showed you guys. If you want to look at the short side on the Euro right now, I think that it's better to look at Euro Yen, or even Euro Aussie. I mean, we just talked about Euro Aussie, that 152 area. It's really 150, 190 to 152.40 in Euro Aussie is a big area to look for a turn on the downside. For Euro Aussie. For Aussie dollar, I have a question about that. I was going to go there next. So here's the weekly chart. So we're coming into a pretty big level. I think I talked about the Aussie last night and talked about potentially, we're coming up on this huge median line here. We're coming up on, we're at, I should say, we're at this reaction line here, okay, and this is simply a parallel that extends off of the lows from August and October. Okay, these are reaction lines here. So, basically this line here is going to be your eventual level to sell into. And support lines, or this is the same median line from the weekly. This is the line here from the parallel. You do have a possible measured level at 80.47, 80.48. I think I said 80.50 last night. So, I mean, that's what I'm talking about, this level here. And they all coincide, early next week. So if we do get, kind of a spill, if you will, into down here to 80.50, I would, kind of start looking for a low before you get the rip higher into resistance. 80.50, you can get all the way back up to 84.15 before you get more sellers to come into the marketplace. So would be looking for a low in Euro or an Aussie dollar over the next 2 to 4 days or so. Fernando asking about the Euro pound. So there's the running triangle, of course. And Fernando wondering if we are now coming into, the bigger breakdown here. And we, may very well be. It's pretty clean consolidation, of course. We are still in consolidation. Okay. One thing that I want to make clear here when it comes to strategy, if you're in a range, you want to look for resistance to sell into. Okay. If you're getting to a point where things are very extreme, you want to look to fade the trend. But one way to go broke pretty quick is to front run breakouts. What I mean by that, applies here. So in the fact that we have this beautiful you know, triangle consolidation, and you would expect it to break to the downside, and it may very well break to the downside. If you're shorting right here, where's your stop? It's got to be pretty high up here, and even then, you have no idea if it's going. You're not giving yourself much of a chance. So, the range in a range you want to sell up at resistance. This applies to the pound dollar trend or current move, right? Pound dollar is in a range, so I'm looking to sell up into resistance, right? Looking to sell up into resistance. I'm not looking to front run the breakout down here. Okay. Jonas asking, do you think EuroCAD is a better if you want to go long to euro, longer term higher? We just look at what we did here. We just came back and on EuroCAD we tagged the year open price 46.35, and now we're coming off again. It's almost to the tick. That's the magenta line right there in EuroCAD. You could be forming some sort of a base here. For EuroCAD, Jonas, if EuroCAD, for this to be a long, we're at the month open now. For this to be a long, I'd want to, kind of have this thing find support on this lower median line parallel on the pitchfork. Okay, because if it does, let's see here. Jonas says, think in 2015, not now. Yeah, I mean, look, certainly a possibility. Okay, I myself kind of like to stick to the dollar pairs unless you have a super clean setup. So what's that? 42.13. I want to see where the 240-minute chart. I want to see where a fib comes in here real quick. Oh, because I'll tell you exactly what I was looking for here for a trade. Okay. All right. So 61.8. That. 61.8. Okay. Bottom line. I would be watching for support, the median line parallel, and you could kind of see, if the market were to come down there, you'd have yourself some basing. You might want to watch this line here. So 41 was about 41. 42.18 is the Fibo, former high 42. Basically, about 142 area. Okay, would be looking for that if you're looking for a bounce in the Euro CAD near term. Might want to take a peek there. As far as longer term goes, you'd want to see this thing find support, probably no lower than 140.50. If indeed it's forming a bigger bullish base, like a head and shoulders pattern or something, for Euro CAD. But in general, I don't like to say what I'm going to look at in 2015 because I just don't know. Stuff kind of changes pretty quickly. I will say that I'm excited about a possible Kiwi dollar breakdown moving forward, longer term. Okay, for example, all the big consolidations that we had going into this year that finally gave way in August, September, and all that. We're finally, Kiwi dollar was actually the biggest one of the biggest ones. Is actually longer than euro. Euro, this is the RSI contraction that I like to use as a objective measure of how coiled a market is, so how far it could go when it breaks out. euro dollar was, it coiled 100, what was that? 100, it was 173 weeks it coiled up into on the euro, on the weekly chart. Kiwi dollars coiled for just about as long, 164 weeks. Okay. And we broke down there, and since breaking down, we've traded sideways. Okay. So, viewing this potential sideways consolidation has been going on since September as either A, B, and you're going to get a C-wave flat that ends up here above 80.33, and that'll give you a huge sell. So if you're still here, and we're looking at a possible trade to hold for quarters and quarters, if we get a C-wave flat, 5 waves up from the low here, from the December low 76.08, that might be one. And it could come from up here, okay, from above 80.34. Again, it would be something like A, B, C, okay. So Kiwi is one trade that I go into, 2015 with a potential, potential bias to look at on the downside. Chris Yenter asks, do you have any other bigger picture themes for 2015 that you are looking at? Sure. So one is that I think we probably get a dollar pullback in general. Here you have, pitchfork goes off the 2011 lows and whatnot, and the median line is pretty good because it crosses through a good deal of supports and consolidation, and we're now at the very top actually of the upper parallel. So, we're more or less going to end the year up here, as we're getting into the end of the year, and I would be looking at, early 2015. To potentially mid-2015 for a very sharp pullback, okay? I want to show you guys something else. Gert, this might be of interest to you. One reason why I was looking at the potential for a much deeper dollar pullback, and looking to position for it this week, which we did but got stopped out. So if we look at RSI contraction, hold on one second here. Okay, one moment. I've got to bring something over. Hold on, bear with me for 2 seconds. I'm going to put this on mute. Might take like a minute, but hold on. Okay, hold on. 1 second here. Just getting a bring over an indicator that I don't have yet. Okay. Jonas asking if this will be the last webinar of 2014. No, I'd like to do one more, discuss with Mike, but I might do one on either Tuesday, probably Tuesday, the 23rd, or we could do one on Tuesday the 30th. Tuesday the 23rd is probably going to be good to do. Do one then. All right, so just bear with me. I'm putting an indicator in here that I wanted to. All right. Well, for some reason, this is not showing up. In any case, you get the point. What I'm going to try to show you here is one thing about the dollar and how extended it is. The market spent 16 weeks now. It'll be 17 this week with the RSI above 70. Okay. That's never happened before on the FXCM dollar index. Now, if we look at the U.S. dollar, the ICE dollar index, that's happened, I think, twice. We had one here. It was right here in 19. That was the week of 16, right there at the top in May of 1997. The market pulled back extremely sharp for 3 to 4 weeks. In fact, it retraced the entire former leg up and basically the preceding 4 months, and then it went higher. Okay. And the only other time it happened, as far as being that extended on the upside, the dollar that is, was back in 1981. Okay. And that was 15 weeks. So we're actually going to go past this level, this week. And obviously you had a very sharp pullback there too that lasted the better part of the next 6 months. So it's not just that the dollar trend's extended, it's that it's extended to a point that's really only been seen twice in the 40-year history of the U.S. dollar, and since Bretton Woods. So, as far as wanting to be long dollars against the euro and the yen when you have these kinds of readings. I find it, difficult to do that, and much more, high reward potential on the other side. Okay, it's very difficult to grasp sometimes because it just seems so easy. The dollar just goes up all the time, right? Not to mention we're testing, a huge breakout level going back to March 2009. Okay, so it's very likely that you're going to get a pullback, as you often do in the first attempt at a breakout. It'd be not surprised to see the market kind of break out and trade a little higher, and then get a very, very sharp decline in early 2015. These are dollar yen. It might not get to 119.13. It might just go straight to 118.25. Greg says by price no higher than 611.10. I'm not sure what you mean by that. 611.10. The dollar and the date, June 11th, 2010. I'm not really following. Oh, you're talking about the this is the March 2009 high. This is the June 2010 high. We're actually above that level. So that's what you're referring to. Fernando asking, wouldn't it be better to trade cross pairs? Depends on where the setup is, Fernando. I, at the moment, am quite enjoying trading intraday, dollar yen back and forth because it's moving a lot. For swing trades, yeah, sometimes, Euro Aussie, for example, is one that we're looking at over the next few days, of course. See if we can position something there. But my favorite setups at the moment are this pound-dollar triangle, the dollar Mexican peso pulling back, watching for that big support over the next few weeks, a little lower than here. Euro Aussie for a potential downside move, and maybe Kiwi dollar on the long side because it is coming into support 76.80. So that's what we'll be looking at. Alrighty, so that was that. I'm glad I recorded this one. I'll have it up here soon. In summary, the dollar's still super extended, obviously. Probably sets up for a much deeper pullback in 2015. There have been times in history when the market's just absolutely been completely washed out of a very full boat. This is a full boat. In 2004, for example, going into 2005, the high was the last day of the year. I think it was December 31st. If you look at a chart, check it out. But the euro traded up to like 136, and the market fell like 600 points in 2 days, like the end of December and early January. So, it's wouldn't be unprecedented for us to get a very large reversal heading into the very end of the year or the very beginning of 2015. It's kind of what I'm thinking is going to happen, but we'll see. All right. But yeah, as far as the trades we're tracking right now, again, most likely going to be the pound dollar short and potentially the Euro Aussie short. Got a Brian saying oil is on the lows. Where do you see support? Support for oil. I don't think oil's on the low, is it? I think the lows are in the 53s. I'm looking at 53 even, though, for support for crude. 54.65. Yeah, so the low's a little lower than here. The low is 53.93 as it is now. I would look for support at 53. Okay, there's a big support level down there. All right, okay, so that's it for this week. I'll talk to Mike and see what we want to do for next week. We might have, or I might do my midweek webinar on Tuesday the 23rd, as obviously we're kind of won't be publishing on Christmas Eve, Christmas Day. I'll have some updates for you on the 26th, of course, just the day after Christmas, but not going to have anything for Christmas Eve and Christmas Day. But maybe I'll do a webinar on the 23rd. Might be a good idea. Okay, so thanks again, everyone. Cheers. Have a super weekend. We'll have the swing report and timing post out later tonight. All right, bye. Oh, Brian, thank you very much, man. That's great. It's really sweet. Have a good holiday with your good family. Absolutely will. Everyone enjoy the holidays, okay?